Hello and welcome to ATFX's US PCE Price Index preview. So as most people that are watching the markets very, very closely at the moment will be aware, this is the first of three very, very key data prints that we're going to get out of the US over the next couple of weeks that are probably going to lead us into the first rate cut, and it will be the start of the cycle. Now, the big question that the market is asking itself and the Fed to a certain extent is whether we're going to get the 25 basis point cut or whether we're going to get a 50 basis point cut, and that is very key. The market's still firmly pricing in a 25 basis point cut, and that's from the interest rate side of things. But other markets, and we're going to look at some charts in a minute, are kind of looking like they're pricing in that 50 basis point cut, and that's where there's some real differences of opinion from both the market and probably from some of the indications that we're getting from the Fed. Expectation for the main number that's coming out is for an increase of 0.2% for the month-on-month data. Most people are agreed on that. We probably won't see too much of a variation from that 0.2, but if we do, the market should be off and running. Now, of course, the interesting fact that we've got stocks back near all-time highs, a little bit of a dip yesterday, and certain products, especially in the FX space and commodity space, are sitting at yearly lows for the dollar, and obviously therefore sort of yearly and annual highs and historic highs in the case of gold. And we'll have a little look at gold in a short while. So this is the crucial thing, and really the market's been talking about this data all week as well. It's another one of these strange weeks. We've had a fairly quiet calendar week. There's not been too much going through. Probably the highlight was Nvidia's earnings report, which came out slightly better than expectation, but not as good as some of the exalted expectation we thought. And that did move markets, obviously more aligned to the stock market, but due to Nvidia's size and its recent growth and how the market's moved over the last, it does have a strong relevance for the FX world and for commodities and for the market as a whole. So I'll clip over to one of the first charts that we're going to look at. Have a quick look at cable to start things off. As you can see from the cable chart, we've had a good run, right? So we've had a really strong run, and this is a very familiar theme, and it's a downward move for the dollar really, as the market has priced in definite Fed rate cuts, and then really, to me, the last move that we've seen in mind, and speaking to a lot of people in the market as well, this extra move that we've seen that's broken us out of recent ranges and taken us to sort of yearly highs, that's probably on the back of the market really being very wary that we do get a 50 basis point cut. We've got a few trading sessions heading into this PCE data, but we're seeing just below annual highs really. 132.50 something I think we hit up here. We're back just under 136. We are in touching distance of breaking into fresh ranges, and I do think if we start to see a lower print here and next week's non-farm payrolls, and then we've got a CPI print as well before we hear from the Fed, I think we probably need to see at least two out of those three coming in weaker, confirming that we're seeing a retraction in the US economy, and then that opens the way for that possibility of a 50 basis point cut. I think if they come in largely on expectation, we would probably be hitting that 25 basis point mark, and we're probably not going to see too much of a reaction in the market, maybe even see some dollar strengthening. It's a bit of a crazy call in the recent trend, but that's kind of where we are. So that's the cable chart. We've had a quick look at that, and we're going to move into having a look at what Euro's done, and it's a very similar pattern that you'll have seen, and it has been pretty erratic since we moved out, and there's that really good long-term, this is a daily chart, long-term resistance that came in. Once again, I feel in Euro, very similar to cable, that this is the break of people starting to, and the FX market indeed, starting to look at that 50 basis point cut to selling dollars. It took us through 110, and we got up to sort of 112, right? We're now sitting not too far away, but these have been sharp and whippy moves. So we're expecting volatility, and particularly on Friday when this PCE number comes out. Once again, there's not much around it, and there's not much data that's really going to hit the US market. We've got pretty much 4 or 5 trading sessions before we hit this number, but most people are expecting range-bound conditions and maybe a bit of profit taking, and you can see maybe this move we've seen here is a little bit of profit taking for the market. So there's a Euro. If we're around these kinds of levels, once again, any weaker print, we're probably going to take out those highs, and we're probably going to be looking for moves to take us into fresh ranges. I'm going to move over to the last chart that we want to look at today, which is gold. And anyone watching gold will be more than aware we've just hit historic highs again. and we're still pretty much in touching distance of that thing flying higher as well. We've just come off over the last couple of days. We did hit a near high again on trading in Tuesday. We've come back down. This is a fantastic move for gold. Like, gold bulls have had it away this year. So you're all the way down at levels sort of like just under $2,000 an ounce, and we've stretched up all the way to 2,520. I think it was 26 that we hit the highs at just the other day. But we are hugely in touching distance. Now, there's a couple of factors that are really influencing the gold move at the moment. So obviously this dollar side of the equation, which is what we're talking about, why we're looking at these US data pieces, it moves the market, and we're looking at this first Fed rate cut. The other side, of course, is geopolitical risks do seem to be increasing across the globe. We've had conflict in the Middle East. There's lots of talk of more potential geopolitical risk costs, and gold as a safe haven asset will be bought, and of course has been bought. If we get a weaker print, if it does come in around about zero or lower, and it doesn't tend to have that much volatility in the number, we could see this break into fresh highs. Conversely, of course, if these numbers do start to come in a little bit stronger and show that the US economy isn't pulling back too hard, then we're probably going to lock in that 25 basis point rate cut from the Fed. The other point we've got to look at, just that's instead of just those September numbers, is where the market's pricing in rate cuts for the rest of the year. So we're looking at full 1% coming for the rest of the year. Now, there's only 3 meetings to come. So at one of those meetings, we've got to get the hard 50 basis point if the market's right. Now, the Fed's still probably showing us that we may get 2, maybe 3 cuts. So the market and the Fed probably aren't in alignment at the moment, but we did get very dovish comments from Fed Chair Jerome Powell last week. So this is why it's so interesting. This is why we're looking at these charts at the moment. The other side of the equation, of course, is that we do have some other key data prints coming through in the next couple of weeks. So immediately after this, the market will trade hard on this PCE into the weekend. We'll hit next week. There's a lot of decent data coming out next week, but key to that, of course, is the non-farm payrolls number. That's the big employment thing, and we know the Fed's concentrating very closely on employment as well as inflation, as it always does. And after that, we've got the last inflation part of the equation, which is the CPI. So there's a few parts moving around, as always. This PCE number on Friday is very, very important. It's the first cab off the rank. Markets will trade it and will trade it hard. And because we're sitting at these levels, historic levels in gold, annual highs in currencies, we can and probably should see some fairly fast and hard moves. So should be an interesting few days ahead. Good luck with your trading. If you need anything from ATFX, please do get in contact with us. Thank you.